Hello friends, welcome back to my channel Finance and Fact with SP. Whereas the banks have shown a robust growth on their balance sheet, but RBI is sounding alarm on the microfinance companies. There's a huge risk that the loans that the microfinance companies have provided will default, will turn NPA. Now let us try to understand what are microfinance companies. Well, microfinance company RBI defines as any company whose at least 85% of total assets are in qualifying assets. What is the asset for a finance company? It is the loan that they have given. And what are qualifying assets or qualifying loan? That they should be provided to people who have annual income of less than 3 lakh rupees. So summing it up all together, it means any company who have provided at least 85% of their total loan to households who have income less than 3 lakh rupees. Basically, microfinance companies are formed for greater financial inclusion in our economy so that people who are poor, where the banks have not reached, where they don't have the capability to provide the documents to the bank, the microfinance companies step in and fill the gaps. The nature of microfinance companies can be NBFCs, they can be banks, they can be financial institutions, they can be NGOs, or they can be cooperative societies. They can take any legal form. Some of the examples of microfinance companies are AU Small Finance Company, Bandhan Bank, Ashirwad Finance Corporation, etc. Out of these companies, NBFC forms 40 to 42% of the total microfinance loans, banks form 30 to 31% of the total loans, and other rest is formed by the small finance companies. Now we need to understand that the banks have to provide collateral free loans to its borrowers, the microfinance companies, because it is targeting people with low incomes. And what are the target audience? Obviously the unbanked people, the women, the self-help group, self-employed, professional services offering, such kind of people are the target audience. Now since the banks are providing the collateral free loans, the RBI mandates that they have to do a thorough due diligence. So they have to get their KYC norms, KYC papers, they have to be KYC compliant, they have to check their annual household income. Why? Because RBI mandates that if a person has taken loan from multiple microfinance companies, at any point of time, its loan repayment liability should not exceed 50% of its monthly income. So for example, a person who has taken, whose annual income is, let's suppose, 2.5 lakh rupees a year, which roughly comes out to 20,000 rupees per month. At any point of time, no matter how many loans he has taken from the microfinance companies, the EMI, monthly EMI, should not exceed 10,000 rupees. So that is what the RBI mandates. Now in order to check this, a microfinance company have to check their CIBIL report, have to gather their credit reports, and also obviously have done the KYC, they have to check their financials, they have to check their repayment capability, etc. However, from December 2024, in the report in December 2024, RBI has mentioned, and since then it has always been a rising trend, that the borrowers from the microfinance companies are on verge of default. And when I speak this, they are not on the verge of default, they have actually defaulted, meaning thereby the NPA norms have been applicable to them, and the major portion of more than 60% of the microfinance loans are turning NPAs. What could be the possible reasons? Well, see, there is a lot of competition amongst NBFCs. They want to capture as much as unbanked people, and they want to provide loan because the loan are at a higher rate of interest to these people. So they want to get the most people on their loan book, on their asset book. However, they are not doing the proper due diligence. They are not assessing whether the person has got the repayment capability. After COVID, coupled with geopolitical conditions and rising inflation, anyways, the Indian households. Another issue is that of repayment capability. See, after COVID, the inflation has risen many folds, and also the COVID has impacted many people employment as well. So, anyways, the repayment capability has taken a hit. Because of that, also the borrowers are not able to repay the microfinance loans. Third reason is operational inefficiencies by NBFCs, where they have the collecting agents. Now there's a high attrition. That means the people are leaving the companies very often. So once their task is assigned, they come, they start, and then they again resign, and then another person has to come. So because of that continuous circulation, a lot of inefficiencies creep in. These factors combined together have put NBFCs in a very tight situation where majority of their loan, almost 60% of their loan, are facing NPA crisis.